Good morning. I'm going to just share this article on YouTube ahead of publishing it on Substack. This is the Oak Bloke, and my Substack is I've written an article called "Happy Easter." uh, and exciting updates from the Oak Bloke. What I've done is just work through kind of where everyone's at in the fun run, which is I find myself at position number one for the second time this year. Uh, that was quite a surprise actually. I didn't kind of expect that, but I've pushed ahead of Mr. Thompson, and as you can see, there's uh, different people at different positions. But anyway, interesting as well that looking at the 2024 numbers, this lot of volatility, a lot of volatility. So I'm going to look at 2024 some other day, but for this one, what what I've started to just think about here is, well, what's working, what's not working. What do I feel optimistic about, and I suppose just sort of thinking about portfolio balancing, like what what do I, and this is just me talking about my own view of things. It's not advice. This is just um, entertainment purposes, etc., etc. But this is kind of what's going through my mind when I look at the 25 ideas that I proposed for 2025. So anyway, I talk about being in gold position, and it's gold holdings that have got me there. Yeah, and that's true to quite an extent. So if we have a look at this top two holdings, very much centered around gold. This one's not 100% gold, but certainly about 60% gold. But was just incredibly undervalued to begin with. It's still trading well below its NAV, and when you actually look at like how they come about calculating their NAV, and if you actually look at putting some reasonable numbers in, um, extrapolating that NAV and saying, well, look, this is how the world's changed, so this is the news flow. I'm now getting to 80p, which, considering that this was so back 112% ago, it was I think 10.5p. It's now at 3.5p, so as I say, it's more than doubled, or maybe 24p actually, thinking about it. So it's up a lot, but it's dropped back from it was at, I think, 26p, and it's dropped back a little way. So I'll be talking more about that one, Mineral and Financial, but also Thor. Thor is a Nigerian gold miner, and they've recently announced that they're going to start a dividend of 2.7p a year for the next 2 years at least. And that at the time, I think it was when the news hit about that, the share was at about maybe 22p. So that meant that it was a 13% dividend yield. And as you can imagine, I mean, the share has just shot up since. But even so, it's shot up by 50%, getting it to 99.2. But when I wrote my article, I kind of said, look, like it's almost difficult to believe how cheap this is, because the price earnings on it is well into single figures. I mean, it's almost insanely cheap. So no surprise whatsoever, as far as I'm concerned, that they were able to afford a nice big dividend. And to be fair, the CEO promised that he would be initiating a maiden dividend. So yeah, he's good as his word, which is great. So we'll talk a little bit about that one. Mkango. So Mkango is one of these that, if you kind of looked at it, you'd dismiss it as complete garbage. Oh, it's got no money. It's da 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 da. But when you looked at the technology, you looked at the assets that it held, and also just the way the world's heading in with this bipolar or polarization of West and East. it seemed clear to me that it was going to be a beneficiary of that, and it's news about the US rare, magnetic rare earths recycling facility, and the scale of that and the NPV of that. I mean, when I read that, I was astounded by how good that was, how strong the economics were. So again, that felt like it was a complete no-brainer, and so again, no surprise that it is where it is. Watkin Jones, number 4. In fact, let's just sort of move through some of these. Yeah, in fact, let's kind of just explore. Let's go back to number 1 and just let's explore these a little bit. I'm going to try and make this a quick video, but basically, when I wrote this article, I wrote an article in February, I wrote another one in March, and in this article, this was based upon the update as at 31/12/24. So we see a 10% increase to 29.2 to 32.2p. So this is trading at, I mean, on the official NAV at about 25% discount to NAV today. And we see that there's various things that have changed in the portfolio. There's a purchase of silver, so there's a purchase of physical silver, 100,000 shares at this price here. Current price on it, when I last looked at it, was about $17 Canadian dollars, so 17 loonies. So it's already in the money, but I mean, if you believe that silver's going to go higher than 32, obviously, yeah. In fact, in the article here, I said, that's up, about 5%. So yeah, $54,000 gain. Now that obviously doesn't look very much, but this is quite a small trust. So even small amounts, actually, in a pence per share equivalent, is decent. Decent. So yeah, certainly. The other part to this was I looked at Golden Sun and looked at the so that they've got this tailings of 3.2 grams of per ton of gold, but this is gold that they're not having, or that they're not having to mine. They're not actually having to do anything other than just move it from A to B, process it, and recover the gold, and they're getting 3.2. I mean, what a vastly inefficient operation that was there before, to be leaving behind 3.2 grams per ton of gold in the tailings. That's kind of like one of those episodes of Gold Rush where the guy sort of puts his pan at the end of the effluent and sort of goes, oh, you're losing lots of gold, and Freddie Dodge moment. But yeah, that's 10 months supply at 3.2, and then after that, when they have to go and actually mine the stuff, I mean, we're then talking 5 to 6 grams a ton. So very, very strong economics, and they reckon that they can get to 25,000 ounces per year. So what I did was I mean, and I don't know these precise numbers, but I mean, 1,500 is quite high. I mean, that's not a cheap all-in sustaining cost, but I mean, if that's the number, and at the time I was talking in terms of, well, this is only a few weeks ago, but I was talking in terms of 3,025 per ounce gold. I mean, plugging in those numbers to that production gets you to this is where MAFL own 5.56% of it, that you're looking at something like a $2 million annual return. So I mean, if you say, well, something that generates a $2 million return, and it's mining, so you don't value this stuff at 15 or 20 or 25 or 30 times. You value it quite low because it's cyclical, it'll go up and down. So you probably, I mean, 6 times isn't an aggressive valuation. I'd say 6 to 9 times is about right. So 6 times valuation gets you to well, I mean, I said 5.5 times actually, because I've said 11, because it's a nearly $2 million return. So that gets you to double the book value of Golden Sun. And the similar thing with TerraSun. TerraSun is has rigs, it has a gold process and a leaching plant. So it has like a whole load of assets, you know, that can be used for gold mining, and it's next door to Nicaragua, and obviously in Costa Rica there's gold mining, but it also holds various different permits and projects that have got either historical gold or discovered gold, you know. So there's you know, indicated resources, so an MRE. So again, you know, I sort of said, well, just assuming, you know, like $1 million valuation on each one, which is nothing really. I mean, that's like token amount. Then I kind of you know, at 3,000 an ounce again, just sort of said, you know, that you know, that valuation, the official valuation of 5.56% of it, implies that the whole thing's worth 14 million. I mean, if you've got 5 rigs and a brand new 500 tons per day plant, I mean, the capital value of that, let alone, you know, obviously in, it's the usual thing, you know, like, oh, you know, here in the Yukon we can't get stuff for weeks and months. Well, it's going to be no different in Central America. I mean, there's not going to be, you know, spare equipment hanging around generally that you know, oh yes, I just need an extra rig and I just need an extra wash plant. Like, you don't, these stuff, you know, there's not stockists waiting with this stuff, so it's potentially quite, you know, quite valuable in the sense that if with today's gold prices, somebody needs a wash plant, they're going to want one pretty jolly quick. So anyway, you know, just saying, well, you know, the capital cost of that has got to be not far off 8 million, something like that. And then all we're saying is, like, for the remainder of that 14 and a half, 7 of the 14 projects, you know, at $1 million each. I mean, that gets you to 14. So that's kind of where I get these what it could be worth numbers from, is that that TerraSun, you know, rather than being worth 0.8 of a million, gets to 1.2, and this one, as I said, at 5.5 times or 6 times, gets you to 8.6 million, which is 22 pence a share, which is 11 pence higher than the official NAV. This NAV here, so this sort of 15 pence here, this is the value of the strategic part of the NAV, the 32p. So what I'm saying is that you can, you know, and this is without sort of saying Digby and Idion are worth anything above their book value, which again, I think we could make a strong argument that these have got upside in them as well. And the point was that when I looked at this again, here we are now on the 18th of April, and this article was in March, so about a month ago. I mean, gold prices are now 300 higher, and actually, when you do the maths, I mean, you can basically add about to the ones that are gold, which is Golden Sun. Red Core is about 45% precious metals. So if we even just add 10% on that one, 20 on that one, 20 on that one, 20 on that one, I mean, you get to you get to 80 pence overall for the NAV, on a you know, on a what I think it could reasonably be worth. And as I say, I mean, that's based on current gold prices and about 5.5, 6 times valuation, making a set of what I think are fairly conservative assumptions. I'm not pretending that, oh yeah, you know, surely they can mine this stuff for 1,000 an ounce and, you know, therefore making 2,000 margin. No, I'm saying like 1,500, which is not, you know, that's not sort of world leading by any means. It's not the most highest. It might be higher. I mean, if it is higher, then obviously you can um, shave off money off that. But I mean, even if I'm 100% wrong, and you know, it's half of what I'm thinking it is, like the ASE is 2,200 instead of 1,500. When you plug in the numbers, the point remains the same, that the 24 pence market price is flipping cheap. And anyway, it gets better because the other thing I did was no, there's obviously more news to come on the red core and the Portuguese asset, but actually I started to work through this list here, and this price here. I mean, this one had gone up 13%. So 149 had turned into 170. Ascendant was on 8, so had gone up 33%. This one, Barrick, I think, was at 20 something, has gone up about 5%. All of well, I mean, obviously some of these are copper and other things, not gold, but about 60% of these are, and you can sort of see the names here that there's quite a number of, and to be fair, I suppose you've got to look at this number over here. I mean, Luca, I think Luca, when I looked at it yesterday, was 130. So that one, that one's almost 10% higher, and that's the one that's 1.5 million. So I mean, even that one alone, I mean, you're looking at 150,000, on top of 4.2. So that's about 5% uplift. So that's about a quarter of a pence, just that one share alone that it's got holdings in. So yeah, I think there's you can get to 80 pence very, very easily if you agree with my perspective on MAFL, and that's where I sort of said, the official numbers are 33.2 pence. I mean, even just taking like no extrapolation, you can get to 39 pence, 39.2 pence, as at that date, based upon what the gold is now worth. So this is bullion gold. They've now accumulated 1,210 ounces of gold. Obviously, the silver's got to be counted in there as well. But this number here, when I actually just worked through the listed shares had gone from 11p to nearly 16p. So there was a sort of 5 pence gain. So you get to sort of 39 pence, even without doing any kind of anything on these numbers here. But if you agree that these numbers here are just underreporting, that this is where the growth is as well in the unquoted. So as I say, that gets to kind of nearly 80p by my reckoning. And it's always psychologically hard. I mean, when you've made 100% gains and you sort of think, like, it's kind of reached its top. It's now expensive, but I mean, when I sort of work through these numbers, I sort of realize, well, no, it's not. It's not at all. It's, potentially it's a 70% discount, which is just insane, which suggests to me that it's got, I mean, well, like another doubling would get it to a 40% or 35% discount to what I think it's worth. And then you've got to consider, well, we're not talking about a static. I mean, what if gold carries on? What if gold gets to 3,500? What if gold gets to 4,000? I mean, there's no stopping of the momentum at the moment. There's a fairly a fairly solid trajectory. So I mean, you've also got to think of it that way as well. That I've not sort of done anything other than say, well, today's price is, and of course, again, I'm assuming that there's not going to be a vast retrenchment. I mean, if you believe that gold's going to rapidly drop to 2,000 or rapidly drop from 3,300, then clearly today's price is probably about right, if not a touch expensive. And yes, top slicing is the way to go, and or maybe even just sell the whole thing and say thank you very much, I've made 112%. I'm not saying I've got precisely the answers on these things, but yeah, I don't kind of see how that story would happen when we've got a lot of people getting out of US equities and a lot of negativity now towards US equities. And where are people going to put their money? Like, are they going to just invest it all into bonds, where even bonds now are sort of like, is US government debt as secure as it once was? I mean, arguably people are saying, well, no, because like even that's sort of not cast iron. The US government are still increasing their indebtedness. They're still um, working on, there's a lot of uncertainty around tariffs and everything's just jumping around, jumping around. I mean, where do you hide when things are jumping around and there's uncertainty? Well, certainly, one of the destinations in that scenario is gold. I mean, if you think that Trump's going to suddenly stop his jumping around and news flow. I mean, I'm trying to be polite about it, but news flow. um, then obviously, yeah, gold could go down, but I don't see that happening. Far from it. In fact, the opposite. I mean, even today, this morning, he's saying, we're in no rush to agree tariffs, or agree free trade agreements. We're in no rush, which is disappointing for Japan. I mean, I obviously, things that I hold Japan assets, and I'm very keen on the value and the opportunity in Japan. But I mean, you can't fight the Fed, and you can't fight the macro of what Trump's saying and doing. I mean, that will obviously make a big, strong determinant as well. Anyway, moving on to number two and Thor. I mean, they released their Q1 numbers and just spectacular, like really, really strong. All-in sustaining cost of about 800. I mean, obviously gold. I think they got an average price of 2,760. I think it was. Managed to unwind all their hedges, so they're basically just getting the full benefit. There's no hedged production. They're getting the full benefit of gold. They're working towards looking at the feasibility of going underground with what's currently an open pit at their Segi Lola main but also looking at satellite locations. So lots going on, and then they've also got Douta and their I think it's Cote d'Ivoire located project as well. So I mean, when you looked at these numbers, when you looked at, I mean, this is 2022, 2023. When I looked at these numbers and just extrapolated things, this is the Seguilola. I think uh, this was kind of where I started to get to was, uh, and a couple of other things actually. I mean, there's no taxes, no taxes until the end of 2026. So this year, next year, um, there's sort of just it's all flowing to the bottom line, which is fantastic. So um, the interest taxes. I mean, there is no interest because they're debt free. They've paid that all off. There's no taxes because it's tax free until the end of 26 to encourage mining production in Nigeria. And then the DA, the depreciation amortization, is 10 million. So, whatever you make profit wise as an EBITDA pretty much is your net profit this year and next year, and that's why they can pay stonking big dividends. But yeah, when I looked at this is kind of where I sort of saw it going. Was my estimate was that the profit was going to grow, and this was based upon. I mean, you can see it here. This was based upon 2,300 gold. Okay, so I wasn't being aggressive in what I assumed would be the gold price. Now, obviously, for some of 2024, it was about that level, probably early 2024. But as I say, I mean, the average now is well above that, well above that. The ASC I assumed at 1050. Well, they've reported that no, exactly as they said it would be, that it's below 1,000 and it's actually close to 800, 900. They guided for that, and it was that, and it was at the lower end of that. Actually, it's very, very impressive. But even just on these conservative assumptions, I mean, that was a price earnings at the time of 1.5 times. It was like, well, that's just mental. That's just mental how cheap that is. Like, how is it that cheap? And I could only assume that it was just people saying, well, it's a dodgy jurisdiction and this and that and the other. But I was looking at it and I was like, well, no, because there's plenty of oil and gas that have been there for decades and operating successfully. I don't see the political risk that people are perceiving. Nigeria is a very populous, prosperous country. It's not a poor country. It's a very successful country in many ways. Has its problems. I'm not saying it's an unblemished record, but certainly, as an investor looking at risk, I mean, there's plenty of worse places to be worried about than this one, than Nigeria. So yeah, I didn't buy that thing about, oh well, it's pricing in the risk. That's garbage as far as I was concerned. So anyway, that that then sort of moves to, well, if we say 2025, and I'm now saying 2800. So again, I'm not, this is now proven to be well below what what the reality is. I mean, that's obviously what they've achieved in Q1, but Q2 to Q4, I mean, we're looking at probably looking. I mean, if again, it's up to you. If you think it'll stay at 3.3, that's kind of now the sort of the average for 2025. You can add 500 to that number, and 500 on a margin of 1600. And again, that's based upon an ASC of 1200, which is well below. So I mean, that is about 350 too high, and that one's about 500 too low. So 850 on 1600. I mean, you can sort of see where this is going. Like, earnings per share is actually going to be about 25 pence. Now, this share is 25 pence. So we're back to where we were before, when I was saying price earnings 1.5 times is insanely cheap. It should be, what, 5 times, 6 times? I mean, well, come on, probably even like a touch more than 6 times, because this is pricing in Seguilola as it is today. It's not pricing in any of the other projects that it also holds. It's not pricing in the lithium in Nigeria. It's not pricing in all of the satellite opportunities, all of these, not pricing in Douta. I mean, look at Douta. Near to Douta, you've got this mine that's produced. I think this is just historical to year to inception to date. Produced 5.5 million, 4.4 million, 1 million, 1 million. So round and about, people have produced like over 10 million ounces of gold, and these have found, certainly samples, grades of, I mean, look at this. Like, get your head around this. Grades of 10 grams per ton, 8 grams per ton. I mean, obviously 2 grams per ton, but even 2 grams per ton. I mean, these are some amazing good drill results. I mean, and who knows? I mean, obviously there's more drilling. They've got to do a DFS. They've obviously got to do all of the legwork to justify a final investment decision. But I mean, gosh, like, there's like nowhere in that share price is anything to do with Ivory Coast, as far as I can see. As I say here, news is pending its earlier stage, but there's a lot of different lot of different news flows. I mean, as I say, these things have kind of come to pass. So I mean, even at today's share price, which is at 35 pence, I think we're still looking at something that's just incredibly cheap relative to its potential. And obviously, I need to write another article and to assess the Q1 results properly. But just working through the numbers, I was just gobsmacked how cheap that one was. So moving on to Mkango, Songwe in a prayer, Songwe being the mine. So these guys have got a mine in Malawi. In fact, they've got six mining projects. They don't have a mine. Sorry, I'm getting ahead of myself. The mine is not a mine; it's a mining project. So it's a project where the economics on it is based upon a, a price of, let me get my head around this. It was yeah. So based upon that total rare earth equivalent of 32,000. So that's, again, that's not a vastly high price for rare earths. And obviously at the moment, with what's going on with trade wars and so on, these are now minerals under restriction. So the anyway, strong economics. I think you can argue about whether that NPV is higher or lower, depending on whether you feel 10%'s 10%'s a bit aggressive, or like here I'm saying it will, these sell for more than 32. So I mean, the future basket price, and to my mind, like saying, oh well, today the basket price is X. Well, and here I suppose this 516. So if you divide that by 7, you get to about 80,000, I think it is, but that's only one of the rare earths, of course. So I mean, when you sort of say, well, the basket price by the time this thing's built will be this, and the forecast price is 76. I mean, that's over double. That's over double what the this calculation was based upon. So very large amount of the good stuff, if I can call it that, the rare earths that are actually worth a lot. So this is very good. Very good. 92% of all magnets are made in China, so this is kind of part of why I suppose the retaliation now, where 2/3 of all production is China, and then you've got to sort of look at it and say, well, that percentage there you could sort of even just count out at the moment because of disruption and civil war, which leaves you with 20% here and 67% here. So yeah, there's grounds for optimism, especially when you consider that demand is growing as well, and you can see there US demand is growing fast. The European demand is growing fast. Obviously, rest of the world a little bit, and obviously Chinese or Asia Pacific, which is China, Japan, South Korea. I would say, with probably a little bit of Taiwan and other things, but that'll be predominantly China, Japan, I would say. And there is no substitute for these things. You can't kind of swap them out for something cheaper or different. You kind of use rare earths, or you use rare earths. That's kind of the reality of it as well. As I say, I mean, there's various different projects. Five, I think I said 6 earlier on, but there's 5, which Songwe is kind of one of those 5, and that's the one that's the most advanced. That's the one that's got um, the advanced status and the definitive feasibility study. This as well. So Puławy has been designated strategic by the EU, and it's based in Poland. This is basically a way of refining the rare earths. So they mine it, they send it to Poland, they refine it. We've now got a magnet, and that's sort of the next part of the business. And you could either do this at Puławy, or the ore could be sent somewhere else for refining. So, but what this kind of added in was just a further, and it was interesting actually that this Songwe DFS excluded the separation and the refining. So that when you actually consider it as an integrated, the IRR of Songwe just massively increases if you're actually building both projects. There's a synergy, is what I'm trying to say, between the pair of them. So again, very positive. The recycle business, and again, they've got this sort of short loop, long loop, different types of magnets and recovery of those. So this is a patented technology using hydrogen, uses 90 or nearly 90% less energy than other chemical approaches to recover rare earths. So yeah, very, almost like a no-brainer. It's got UK government support. But the bit that's I suppose and also that they're sort of expanding it out to other countries. So it was originally Germany, UK, and the third one was the US. They've now introduced Japan. They've intimated that they're talking to Canada. So there's the expansion that you could sort of roll this out across the entire Western world, I guess. But this was the one that had just an incredibly strong IRR. That if you actually built a recycling centre in Dallas with two pre-processing spoke sites, that you would get to something like a 500 million NPV, 31% internal rate of return, and that was based on 55, which again is well below what they are saying the future prices of rare earths will be. So again, there's that number's quite conservative. So yeah, very excited about Mkango. Sorry, we're at 36 minutes. I've only done 3 of the 25. I might have to just publish this and you can read the other 20 odd ideas. But anyway, I'll just sort of quickly cover them, I guess. Watkin Jones up 65%. So again, I sort of did a kind of tongue-in-cheek article where I said, well, let's just close this down and sell off the assets. Let's get this much for the equipment and this much, and I was sort of like, oh, who'll give me I think it was maybe 60% off for the equipment, and then let's treat this is the cash, this is the liabilities. I mean, even doing that, it was just ridiculously cheap. And then when you say, well, hang on a minute, this isn't closing down, it's nowhere near closing down. In fact, it's just carrying on building things, albeit at a there has been a sort of a nadir to the markets, a dip in the ability to get finance, to get projects financed. But that's not that's not kind of been a 100% drop. It's just been a drop. Uh, but yeah, it was completely overdone. So the fact it's back up over 65% doesn't surprise me one little bit. Plenty more left to go with that one. There hasn't been a lot of news flow, but I'm pretty comfortable waiting for that to happen. Livermore, I thought, there's more to it than just the fetcher investment, but this was very interesting about how it uses a large market model, an LMM. You may have heard of a large language model, an LLM. So LMM is something different, and that's kind of like using prices and numbers rather than using words and language to build an AI engine, an AI model. So very, very interesting. It's had a lot of investment. I think it's got massive upside and potential. I thought it was very interesting to read about what the Delta being obviously a large US carrier, said about how it was sort of something that he was really, really excited about. I thought that was very interesting. And so that alone, I think, is very, very well worth. And then the other assets they've got are all decent. There's a bit of a mixture of things in Livermore, but again, not surprised to see that on some upside. Kavango, that's been kind of doing that's kind of been in the dumps a little bit. But watching the news flow, and the bit that I kind of watched was the RNS, where they said, well, we've kind of cleared out all the muck, cleared out all the waste, where the previous owner had sort of sealed off a cave, hence this sort of themed picture, because that's sort of what it reminded me of. So Kavango have kind of got 6 mates and kind of gone on an adventure down a cave system, found a secret level 3, and they've only done samples. I mean, this isn't an MRE, but when you actually look at the samples, and what I actually did was I said, well, let's take all the samples, let's take an average of those. I kind of get to 5 grams a ton. So, and that's kind of just saying, well, let's process the whole lot, assuming that that's, you know, reflective of the potential of the level 3 of the mine. But the point is, it's already there. I mean, they've obviously got to put some capex in to kind of make it all happen, and maybe have sort of, you know, two shafts. It would be ideal, and to mechanize it, to put some jackhammers in. I mean, this is a link to the video. And this is a video from last August where they're stood at level 2, not at level 3. That you can see in the video, there's sort of all the rock, you know, there's like a rock fall, I think they refer to it as, and muck. This gentleman, the geologist at Kavango, refers to it as muck, but it's basically like, yeah, you know, it's inaccessible down to sort of this level 3 shaft. But the yeah, I think potentially very exciting in that. Let's yeah. So in this quick update article here. So this was kind of, you know, they were stood by here pontificating about, you know, the west side and the east side, and operating on this side and doing blasting, and this would generate 3,000 a ton. And you know that they've said perhaps it'll be 2 grams a ton, perhaps be 3 grams a ton. Obviously it's early days and they hadn't done all of the due diligence and the sampling and the definition and the mine plan. So I'm not sort of saying that it's anything more than, you know, I'm putting the same, I suppose, qualification on it that they themselves put on it. But this RNS news was that they've kind of, you know, busted through, for want of a better term, to kind of access this shaft that goes down to level 3. They've got this, you know, it extends out almost as far as this one extends out. So I don't know if you can see that scale there, but that's sort of about 30-40 meters by the looks of things. And the samples they got from this level 3, I mean, you can see them here, level 3. You know, we've got a grade of, this is grams per ton, 46.6 grams per ton, 65.7 grams per ton, 53.3 grams per ton. And this is over a width of 1.5 meters, 1.4, well, sorry, yeah, 1.46 meters, 3/4 of a meter, 0.8 of a meter, 0.7 of a meter. So the widths aren't vast. I mean, they're not sort of, we're not talking, you know, but, and obviously we don't know. I mean, that's one of the dimensions. So we don't know the depth. We don't know, you know, obviously you've got to sort of think of it as a 3-dimensional calculation, not just a 1-dimensional. But I mean, if we sort of say, well, you know, this grade and this width, you know, so we're sort of, it's like sort of taking a cube and saying, well, based upon the width of the cube and based upon the amount of I don't know, like the amount of gold in the, you know, this little one side of the cube. We don't know how high it is, we don't know how long it is, but we know how wide it is at this stage. Based upon this calculation compared to other cubes that we're looking at, I mean, this kind of is where I'm getting this average of 4.7 from, is that if you take all of these threes, so I sort of added them all up, took out all the twos, you know, and obviously even the twos, I mean, you can see there's some twos that have got 7 grams of gold and 3.6 grams of gold and 1.5 and 3.3. So I mean, the level 2 is not rubbish. It's not uneconomic. You'd have to plan where to dig and mine, not bother, because it's, you know, the gold's not, you know, you'd go after the seam of gold, I guess. So anyway, I just think that, you know, well, it was at 0.7 of a p. I think it's now slightly higher. At I think yesterday it went up by about 0.05 of a p, so it's now at maybe zero point 0.8, 0.7, 0.8, something like that. But I mean, it's below where it was a year ago when it was at 1.05p, when gold was 2,300. And that's the point I make in this article, is I say, um, you know, gold was 2,300, it's now 3,300. So for this to be at 1.05p a year ago, when they not discovered, as much as they've discovered now, where the news flow was kind of quite early on, like it's it doesn't make sense that it should be this cheap. It's got left behind in the general increase of the price of gold miners, I suppose, because people don't really rate it or say, oh well, it's in Zimbabwe, it's full of risk, da di da di da. And I think the only thing I'd say is, well, watch the Kavango video and judge for yourself, because I I kind of wonder whether this one will and actually, sorry, yeah, the other question is not just, is there gold there, because that's obviously part of the equation, but well, can they get the gold? Can they can they turn this into production? Well, the point is they've got production. I mean, they've got, again, in the video you'll see a clanking operation, and they walk you through it, and they've got some pits, and they've got carbon, and they sort of have settling ponds, and it's sort of chucking out small amounts of gold. So obviously what they're looking to do is to scale that up and to improve that process, and they've already started that. But I suppose it's whether they can scale it to a point where it starts to become cash generative. Um, and they've raised quite a bit of money. I mean, they're in terms of market cap, it might be worth it just quickly considering, where are they at as a market cap. So let's just grab Kavango here. Yeah, so they're at 0.8 of a p to buy, 0.75. So 23 million market cap, and the news flow. I think they've got something like 5-ish million pounds sat in the bank. That they've been able to raise. So you've got Prospect 1, Prospect 3 at Hillside. The news flow here is looking very, very positive. This Let's just go back with the news flow. Yeah, strategic financing raise. So um, secured 1.5 million, raised. Yeah, total value is, sorry, it's more than 6. It's 10.3. But I might be right on this, in the sense that it's 10.3, but that includes paying back the advanced loans. So there's these collateralized loans that convert into equity. So I think in a past article I sort of said, well, look, you know, this is kind of where everyone gets diluted by 50%. So if you owned 1,000 shares, you now own the equivalent of 500 shares, or at least your 1,000 shares are now sort of part of a smaller, or sorry, a larger pot. But what will they be able to do with this money now? Again, in that video, I mean, they talk about, like, the engineering to get level 2 going, and they sort of say, this much per meter. I mean, you can watch it for yourselves. This much per meter, and it's this many meters, and the guy's sort of like, obviously he's sort of knows his stuff, works through the numbers, and sort of comes up with 600,000. The geologist says, oh yeah, that's fair, that's fair. But contingency, well, if we had $1 million, well, they've got more than $1 million. I mean, to me, like, if the economics of doing level 3 is similar to level 2, and obviously it's a level down, so there's probably a bit more vertical distance, but like, that's not going to double the cost, should we say? That it's just sort of considering the mine plan at level 3 instead. And if we're talking of $1 million to do that, so about, what's 12.7 million pounds. I mean, that's sort of a small fraction of that 10 million. I'm not saying that that 10 million's just sat there with nothing to do. They're obviously spending it on other things. They're spending it on drilling and prospecting. There's the Nara purchase. There's other things that that money will end up getting used for. But I don't know. I think there's a very good chance here. So whilst I included it as one of my sucker stocks, I kind of said, well, like this has got some very, very good prospects if they can pull it off, and there are room, there's some room for optimism that they will and shall and are. So that anyway, that's kind of covering just a few of the Oak Bloke 25 for 25 ideas. I hope that's been useful. I'm going to leave it there because we're at 50 minutes and like nobody wants to watch hours and hours of these videos. I'm sure you get terribly bored. But I mean, I carry on with this article, idea 7, 8, down to 20, so I sort of just cover each one of them. Do I think they're good, bad, ugly? And I'm just saying it as it is. I've got no, I've got no axe to grind. Actually, the only axe I've got to grind is that if you enjoy these videos, if you enjoy the articles, and there's now 668 articles. This week I've been writing about the Brazilian Latin America, sorry, the Black Rock, start again, Latin America, which is Brazil and Mexico pretty much. Been talking about Ixico, been talking about Ocean Wilsons, I've been talking about this high dividend ETF, I've been talking about what used to be Metal Tiger, now SRT, which is Strata. So there's lots and lots and lots and lots of content that I hope you find useful. Lots and lots of ideas. This is just me talking kind of about things I know about and have researched. It's not advice. This is you make your own investment decisions. But if you find this useful, and I hope you do, I'd really encourage you to help Emmaus. This is my campaign to help Emmaus, and Emmaus is about giving people a hand up, not a handout. The idea being that I've never been homeless, but I can imagine what it would be like if they were. And there's a lot of people that don't deserve to be. Well, no one deserves to be homeless. I'm not saying that, but there are people that maybe make bad decisions and become homeless, and then there's people that serve their country and become homeless, and that just upsets me. Um, so yeah, look, I mean, obviously I did this as a campaign at Christmas time, and 109 readers supported this, and as you can see, I've smashed the target. But I mean, I'd love to do more. Obviously, thank you to all the people that have contributed. And what I'm saying is, if you're watching this video and you've contributed to this campaign, like, you don't need to contribute again. I'm not asking that. I'm asking if you've not contributed and you're one of the people enjoying these videos, finding them useful, hopefully making some money, but that's down to you. That's you make your own investment decisions. But if you can give something back as a thank you, I'd really appreciate it. I mean, I've had one reader that gave just a massive amount. I won't embarrass them by calling them out, but like really generous. I mean, the generosity just blows me away. So yeah, if you can help, I'd really appreciate it. It's just really simple. Click give now. uh you know it's justgiving.com, so it's all very straightforward. These guys run sort of different businesses, so when I say it's a hand up, not a handout, it's because like they put a roof over a homeless person's head, per- but what those they become colleagues, and what those colleagues do is they then work in the businesses. They're kind of expected to give something back as well. It's not just a take. It's they work within those businesses. They rebuild their lives. They get themselves back up on their feet. I mean, one of the really, I think, powerful things that Emmaus do is like help them do a training course or give them sort of support to get themselves back up on their feet. So whether that's sort of just having a sort of a halfway house to then sort of get get yourself into another job or whatever. But the idea is not to create a culture of dependency, it's to kind of turn people's lives around. And I think, we should all just really, yeah, I mean, it's a cause I feel very passionately about, as you can probably tell. Anyway, thank you again for watching this. More videos to come soon. Oak Bloke signing off. Cheerio for now. Cheerio.